Hey, and welcome back to a new video here on our daily video series. Today we talk about the Fibonacci tool, but we are not going to talk about the retracements, but we are talking about the Fibonacci extensions, and I will show you how you can use them to create better take profits and also for your exit taking. So first of all, it's important to understand how price moves. Once you're in an uptrend, for example, you will always see those waves. The waves that go into the direction and then the pullbacks, and then usually you have new trend wave in the direction of the trend, and this is a very common pattern. So in Fibonacci or Elliott wave or whatever, you always have those swing highs and lows, and in Fibonacci analysis especially, we call them A is the first origin of the trend wave, then B is where this swing point ends, so this would be the A to B move. Then here is the C on the retracement, and then you go on and count your way up. And you can see this pattern repeat themselves over and over again. Here were we in a downtrend with a strong bearish wave, then a short pullback, and then another final trend wave to the downside before the trend stopped. And this is very important to understand when we use Fibonacci retracements, because we need to find those initial A to B moves, and then we can draw our Fibonacci tool. We just grab the swing low, then measure it to the swing high, and then you will see that the Fibonacci retracements often coincide with the retracement. And like in this example, 61.8, that's where the retracement stopped, and we have been moving higher since. And now you can see to the upside, you have those extension levels that we will now use. Those are the 138, 161, 176, and the 200. And you will use them for take profit placement or exiting trades. So as we said before, we expect to see price moves in those wave steering trends. And then usually if you have a strong trend, price will continue the way up. And then we will use the 138, 61, or 76 as our take profit placements. We can also see that if we look back and around those Fibonacci extensions, that they also act as, they often fall into the same places like natural support and resistance, like this one, the 38. It makes sense to have your stop loss here because you can expect your take profit, because you can expect some sellers coming in during the uptrend, or also 168 because that's the previous market top, which is very close to the 176. So you can see how you can combine the Fibonacci extension with conventional support resistance and supply and demand, and so pick your targets more objectively with a more structured approach. So now let's take this all off, and I will show you a hindsight example how this could have worked. So we talked about this downtrend. We saw this swing high and then the first bearish downtrend wave. And this is where we could have drawn our Fibonacci tool. Then you see the retracement. It did not quite make it to 61.8, but that's close enough. We don't have to get too worried about if we actually hit the level, as long as you see this trend structure. Then once the price breaks here the 100, then we can look for potential take profits on the extensions. So here you can see the 138 was hit very precisely to the pip. There was also here something like a supply level where price then found support for a little while, but eventually we broke lower. It did not pay much attention to 161.8, although here was quite an interesting level around this area. Also 176, it barely paused here, and it went straight to the 200, where we then finally reversed and made our way back up. So you can see how you could have used the Fibonacci extension to ride the downtrend and to trail your stop loss along the way until you eventually met the 200 moving average, the 200 Fibonacci extension. Here's another live example, the US dollar Canadian 4-hour chart. We also see this very nice A to B move. Then we had this retracement here recently, and now we've been moving up. So let's again take our Fibonacci tool. Here's the swing low, then here we have the swing high. If we are very accurate, then we'll see that this snaps very precisely to 76.4. And now price, if we move a little bit closer, you can even see that we broke the 100, retested it, and then made our way higher. And now price is on the way to 138. And if we look back, then we will even see that there is some support and resistance around this area, and it would make probably sense to take some profits on this part if you are long. Then 168, there's some highs around on this level as well. So if we break 138, 161 is the next level, and then we can take a look at 200. And 200 is a very interesting level. If price can make it up there all the way, then we have this massive swing high, which then cause price to rally lower. So 200 would be the ultimate level if we can complete this Fibonacci sequence. But it's more important to take it step by step. So first you would take some profits, 138. And if you're a conservative trader, you take all your profits here and then you ride the trend as it goes on. And this is how you can use the Fibonacci extensions to optimize your profit taking and also to create a more objective and rule-based approach to how you ride your trades and take profits on them. I hope you enjoyed the video, and I would be happy if you can subscribe to my YouTube channel for more daily trading videos.